مشاهدينا ومستمعينا، أهلا وسهلا بكم في حلقة تكمال. اليوم راح نتكلم عن الديجيتال ماني، وحلقة مع ضيف مميز الدكتور عمر فيشر، مختص وكاتب ومفكر في مجال المال غير الملموس، خلينا نقول المال الرقمي. كلنا ممكن سمعنا عن إحدى تطبيقاته اللي هي العملات الرقمية، لكن ما هي تطورات هذه العملات الرقمية أو هذا المال الرقمي، وما هي التطبيقات المتاحة لرواد الأعمال حتى أنهم يقدمون حاجة مدعومة بالمال الجديد هذا والتكنولوجيا.
عندك مشروع صغير أو متوسط تفكر تكبره تطوره، يمكن تحتاج رأس مال أو مشورة تساعدك تقفز للخطوة الجاية. هنتي موارد اللي موجودين من 2006 ويقدمون تمويل إسلامي مصمم خصيصا لأصحاب المشاريع الصغيرة والمتوسطة، بحيث يمشون وياك خطوة بخطوة، يعني تقدر تعتبرهم شريكك في النجاح. ابدأ اليوم وخل طموحك يكبر مع موارد للتمويل.
دكتور عمر فيشر, thank you for being here, the thinker and writer in digital money.
My pleasure. Assalamu alaikum.
Alaikum assalam.
And I certainly am grateful for this opportunity to speak with you, Brother Abdullah, and also to your audience about what I call invisible money.
Yeah. You know what's challenging for me? Like, I thought I'm older than you now. When I heard about the digital money, the invisible money as you call it, I was resisting it for a while. And then one of the thinkers also came to me and he said, you know, this is not only a good investment for individuals, for organizations and governments. And I was shocked. And now I see you leading this. What do you want to say about digital money, especially in these days?
Well, first, Abdullah, I would agree with you that in many ways you're older than me. The younger generation, even starting from 14, 15, have been experimenting with cryptocurrencies and tokens inside gaming.
Yes.
Whereas my generation, many of us are in a fog. So that's what actually encouraged me to go into the subject. And as you learn about my behavior in the last 4 decades in business, I'm the founder of 10 financial startups in 3 continents, and each one, alhamdulillah, is Sharia compliant.
Wow.
I made certain decisions to bring that about. So I'm carrying that level of insight, and some people say wisdom. We'll let your audience be the judge.
Yeah.
Into this topic of the evolution of money. So, in direct answer to your question, what we want the audience, and particularly the business people, whether they're men or women, whether they're 18, burning with a great idea, or they're 35 looking to leave government or corporations, start their own business, to understand about digital money is essentially, it's the evolution, the natural evolution of money, which when you contemplate it, you recognize that the human being is the only creature on the planet that does value creation. And so money is a measurement. I call it like a yardstick or a meter stick.
Okay.
It's a measurement of the value being created or exchanged between counterparties.
Yeah.
Now, we need to go back to basics before we can come into digital money. Because I said the sweep of 5,000 years of human history has shown that this measurement tool of money has always been physical.
Yeah.
Starting, as I said, thousands of years ago with what's called cowrie shells, colored shells, which were imbued with value to help the merchants trade with each other.
Mm-hmm.
Then we got into metal and stamped coins, often the value of which comes from the authority of the entity of the jurisdiction, right? That was followed in approximately 11th, maybe 12th century with printed currency, because after all, these bronze coins, gold and silver is very heavy. And with trade routes going to Damascus or going to China, difficult to carry all that and subject to risks.
Yeah.
So paper currency, invented by the Chinese, took over in this evolutionary continuum. Then we could say that in the 1965 onwards came the plastic cards.
Okay.
Yet another physical evolution of money. And today we're using that frequently, and also using our phones in contactless ways of payments or settlements.
Yeah.
But still physical. Now what's coming, in fact, I'm going to whisper it,
Yeah.
it's already here.
Yeah. Are you referring to,
Digital money.
is it the same as cryptocurrencies and
Now,
this kind of thing?
Excellent question.
Yeah.
So in my understanding, I would say that digital money is the rubric or the umbrella above crypto. So crypto is a slice of digital money.
Okay.
Now, crypto is issued by, so far, private entities and is essentially a pledge of value or a promise.
Okay.
Similar to in the fiat currency, lending is done through paper contracts, and it's a promise to repay over certain terms and conditions, right?
Yeah.
In consideration for the value offered by the lender.
Yeah.
Okay? So cryptocurrency is, in my view, non-tangible. And in nearly all cases, with exception of stable coins, which we'll come to, okay, it is a pledge and a promise, which is in the air. Now, the difference is digital money, as I said, is the umbrella, has other segments, including stable coins, including tokens.
Okay.
And what I'm most excited about,
Yeah.
and hopefully we can probe this a little bit further in our conversation, Abdullah, is the tokenization of real-world assets.
That's really one of the main things that I want to take in, to really tackle in the conversation and go deep in.
Right. So is it clear, this arc, let's call it, of the, did I make it clear, the evolution of
Yes.
money from different physical symbols,
Yeah.
okay, into the digital space?
Yeah. Yeah.
Good.
It's really exciting that you say that this is the revolution, and it's a new way for me to look at it. Now, I really want to go to the tokenization, which is, I know that it's connected to real estate for most of the cases now, but what's tokenization and what's the future?
Sure. May I first, though, go
Yeah.
back to basics?
Yes, please.
Because I think it'll help the audience to position our discussion when we get into the forward-looking aspects of digital money and the applications like prop tech,
Yeah.
like real estate, securitization. We'll get there.
Yeah.
But I would like first for the audience also to understand what digital money presents by way of this evolution. How is it different from fiat currency, the paper currency in your purse or in your wallet or in the bank,
Yeah.
even though you don't own it if it's in the bank, it's under your name, but actually the bank owns it. How do we know that? Well, out the side door, they're lending it.
Yeah.
And not really sharing much of the benefits to the account holders, except through maybe CDs, certificates of deposit, etc. But that's a slightly different discussion. So what's changed? I think it's important to just home in on this. The first is, as we pointed out, that money is no longer physical. It's now invisible.
Mm-hmm.
It operates in, you could say, the ether. It operates as information.
Okay.
And maybe also in our dialogue, we can talk about programmable money,
Mm-hmm.
which is a really leading edge part of digital money. But coming back, so what else is not there?
Mm.
I believe, talking to many young people, many business owners, Abdullah, what's missing is the emotional connection.
Uh-huh.
And this is part of the reason that I'm in this mission of helping young people and business leaders and people in government also to get a better focus in on and a grip on digital money.
Mm.
In fact, the title of my book, forthcoming,
Yeah.
is called...
And congratulations for that.
Thank you. I'm looking to Arabize it soon, inshallah.
one.
So the
we
title
are ready.
is Invisible Money, the Infinite Possibilities of Digital Money.
Mm.
And I stress that, like other new aspects, and particularly around money and the language of money, you have opportunities that are there and also new risks. So maybe we'll discuss that. But I want to come back to the thread, what's different. So there's no emotional connection. Let's face it, if you're taking currency, paper currency, out of your wallet and you're paying it at the Union Co-op for groceries,
Yeah.
it's gone,
Yeah.
right? And your wallet is lighter.
Yeah.
Or if you're paying with coins, which is still around, stamped metal, right? It's heavy and then it's gone.
Yeah.
Or somebody pays you and now your pocket is heavier. You can feel it. There's an emotional connection.
Uh-huh.
Not so with digital money. So we need to appreciate that the young generation has got to come to grips with something which is invisible to the mind
Mm-hmm.
and not emotional or tactile in a physical sense, that you can actually feel it.
Mm.
And hence, if it goes away or if it comes to you, you're likely to have an emotional experience of that to some extent.
And how is that like related to the evolution of digital money?
Well, the digital money is invisible.
Yeah.
It's only data.
Yeah.
And we don't really control it, right? Digital money as a payment or as an income earning, it comes on invisible rails. It comes directly through wire transfer from bank to bank or from vendor to the retailer, right? You don't see it, you don't touch it, you don't feel it. You just see bits and bytes, well, hopefully a lot of zeros,
Yeah.
and some numbers to the left of the zeros, right?
Yeah.
So the other thing to understand about digital money and how it differs from fiat currency,
Yeah.
which you can experience in the real world, and when it's in your pocket or purse, you own it, right? You control it. But again, not with digital money. Digital money is opening up a whole landscape of risks. The hacking of information, the theft through the cryptocurrency exchanges. Even though the cryptocurrency transactions may be on the blockchain, where does the data reside if you want to do trading? It comes through an exchange, which itself is all digital. But we've seen some horrific hacking and theft of information which has a value attached to it, if we're talking digital money. And poof, it's out of your wallet. Hence, one of the antidotes is having a cold digital money wallet as opposed to a hot digital money wallet. But we can talk about risks, as I said, in a moment. The other item I want to point out in this difference is digital money is likely to put constraints on our personal freedom. Now, how is this?
Digital money.
This is from the type of digital. Remember, we said there are certain segments.
Yes.
Okay? And this segment is called the CBDC, Central Bank Digital Coins.
Okay.
Now, certain countries, and I think we're up to about 12 countries, their central banks have already adopted and are experimenting with the CBDCs.
Yes.
Okay? There's something in my country, USA, which is called FedNow. So the main 5 banks that own the Federal Reserve, which is our equivalent, it doesn't function the same way because it's not owned by the government, it's privately owned in the US. The Federal Reserve, okay, is experimenting through the commercial banks on the CBDCs and how it might be used for payments like wages or Social Security, things like that. So the CBDCs in China have already been experimented with, and it's getting to be tied into what is being called social scoring.
Okay.
So what does that mean? Well, social scoring is where a person's social behavior, your behavior on social media, okay, or podcasts or articles you've written, is not maybe entirely consistent with the view of the government. And therefore, there's a scoring mechanism, the details of which I don't know. It's in Chinese, of course, but I've read about it. So that's an area of risk where then the government uses the CBDC, which again is originated from the central bank and might be used to pay your monthly wages, can use the CBDC to affect your control over what you deem to be your money.
Okay.
So another aspect that I read about is when the Chinese government was encouraging, tens, hundreds of millions of people to accept the CBDC, having an account with the central bank in China, is they issued them free money, digital money, all right? And it came into their mobile wallet on their phone, principally, but they said, you have to spend it. So it was a what we call quantitative easing, effectively, putting more free money, printing money, but digitally, out into the economy, encouraging hundreds of millions of Chinese to spend it in the economy, all right, in order to boost economic development. Now, the key thing to tie this together is if you chose not to spend it, if you chose to save it or invest it, it disappeared within 30 days. So this is an example in my research of where there could be constraints put on personal freedoms that we now enjoy with fiat currency, which might be different, likely in some places to be different, with digital currency. And the last thing I want to focus, what's different in this arc of change, are new opportunities are opening to us.
We would like to know more about the opportunities, especially for individuals and entrepreneurs.
Right.
And that...
indeed. So one area in the new opportunities that fascinates me and that I put some effort into thinking about, researching, and I'm eager to learn more, comes back to one of your earlier comments about tokenization. But first, let me allow me to put a bracket here of a context. So having spent 4 decades in the field of Islamic banking and finance and takaful, which means mutual insurance and risk protection, I'm very sensitive to look for new opportunities where Islamic finance and banking can actually excel, can leverage the technology and innovation to accentuate the Islamic values of fairness, full disclosure, social justice, caring about the environment, and using the digital money opportunities to bring about impact. Impact in businesses, how SMEs raise capital, to answer your question more directly. What are the structure of the digital money payments to the vendors, which could be instantaneous. It could be a lot less what they call friction if these are remittances and settlements of exporters that are sending from China or Indonesia goods and services here to the UAE, right? And not only using Ripple and some other avenues open with digital money, not only is it nearly instantaneous, but the friction of fees and the float that traditional banks have enjoyed to build up their fee income. Sometimes it's 2 or 3 days to close the transaction, where the commercial bank is using that money, which is between the two parties, right, the buyer and the seller, and the bank is enjoying investing that maybe in repos or some other cash management tools to gain extra income for them, fee income. That's all likely to disappear for the SME, which means that the actual cost of the transaction goes down, and that saving can either be added to the margin of the SME owner, or of course it could be passed to the customer in terms of lower costs for the transaction as a whole.
That's very interesting to know that there is an opportunity for the Islamic finance and Islamic banking in the digital money. Can I get more like examples of where the newcomers or entrepreneurs can find opportunities there?
Yeah, certainly. Mostly for fintechs, I would say.
Yes, I mean the fintech.
But also, you know, some people coming out of university or even skipping university to take their big idea into the marketplace. You're absolutely right. So some examples that come to my mind brings us back to the tokenization of real-world assets.
Yeah.
So this is an area which is integral to Islamic finance. As we know from the existing 16 Islamic type of contracts for saving, investing, and trade, right? That there needs to be not only halal income, halal activity, and also treat the risk in a particular way where it's risk sharing rather than risk transfer, which we could go deep into that since I'm the founder of 3 takaful companies in my career. The first one in the United States in 1997, the second one actually in Saudi Arabia with Bank Al Jazeera in 2000, and the third one I raised almost $70 million in Bahrain with our team, and we created Ta'azur as a regional takaful company to address some of the opportunities where many of the takaful companies in property, casualty, and liability don't have scale. So that's relevant to this discussion. Why? Because the tokenization of real-world assets, and by that we mean it could be real property that has an ongoing cash flow because it's commercial. Like it could be the rental building of a hotel, it could be a warehouse, it could be a doctor's office in Sharjah, for example, that's rented. So where there's predictable cash flow, today Islamic finance has carved out what we call sukuk. And sukuk is, another word in English would be Islamic bonds. And that's good, and we've made great progress, although of late the annual volume of sukuks is actually not where it was a couple of years ago. So I'm hoping that through the tokenization, by shifting these type of transactions, which are asset-backed, it could be a toll bridge, it could be a power plant, a utility, it could be, as we said, real estate.
Yeah.
It could even be intellectual property, which is
interesting.
which is generating a royalty stream, again, which is somewhat predictable. So you can put a value proposition on the tokenization, which means the securitization of the cash flows and the sharing with investors. So what happens is, we'll take a power plant, and I like the idea of focusing on infrastructure.
Yeah.
Because I mentioned earlier, one of the issues with Islamic finance to date, in my humble opinion, is an inability to scale up to certain magnitudes of projects, like building airports or LNG tankers. These are huge financial transactions.
And why they are limited from that?
It's limited partly because the available capital coming through the Islamic Sharia compliant mechanisms is risk averse. Secondly, there is an inadequate, my humble opinion, risk protection mechanism. That's why we built that company in Bahrain, Ta'azur, was to start to respond so that the investors in a project would have adequate risk protection in the form of insurance against certain losses, against weather, against certain commercial aspects that didn't go according to plan, in order to help the risk-averse investors to put up the capital to create that infrastructural item, a power plant or a port, for example. So what happens today is typically it's lending.
Okay.
Which, of course, from Sharia point of view, involves riba, which is haram, as we know.
And also the infrastructure or the big projects are not available for most people.
Exactly right.
Yeah.
So this brings us back to the advantage of digital money through tokenization.
How it will be available
because tokenization is another word for securitization of the cash flows from the resultant infrastructure. And what happens then is, with the tokens, they can be fractionalized.
Yeah.
So today, if an individual, school teacher, or even a small business for its own investment portfolio, wants to get involved in a sukuk, many of the sukuks issued, it's $1 billion, $2 billion. They have some scale. That's
the ticket is higher than their
but
abilities.
The entry point, the admission ticket, 200,000, might be even 5 million.
Yes.
Now, I can't talk about your bank account, but my bank account at the moment is not in position to allow me to participate at 5 million.
Yes.
But with tokenization, we can take that 5 million or the 200,000 and break it into, let's say, 2,000 units.
Yes.
And that's the beauty of the tokenization, is it can be fractionalized. Think about a large cherry pie.
Yeah.
Right?
Yeah.
Coming on to lunch. So large cherry pie, and then you cut it into slices.
Yes.
Or a pizza, right?
Yes. Yes.
So you can slice it pretty thin so that the school teacher and the nurse and the SME owner looking to put, say, 20,000 dirhams, 10,000 dirhams, or even less, into that tokenized transaction while supporting economic development and the building out of the infrastructure.
Great.
Then it expands the base of the whole economy. Make sense?
It makes a lot of sense. And why the tokenization implementations are not at the level of, we saw some of them in the real estate, but it's not common. Still very limited implementations.
Well, I agree. My son, second son, lives here, and he has his own startup company in the real estate area, and he participated in the first, here in Dubai, in the first tokenization of real estate from the rental incomes.
Great.
Which is, I think, very encouraging. However, your observation seems to be, at the moment, true, Abdullah, which is that there aren't many people following, although we don't know the size of the pipeline, of course, until certain months pass.
Yes.
However, we need to also come back to what we touched on earlier, in my view, as a partial answer, which is capital is risk averse.
Can you say more about it?
Yeah, so it needs the risk protection mechanisms. So another word that could be used, and it's an area actually that I spent a year working on when I was advising a strategic advisor to the CEO of ICD, which is the Islamic private sector arm of the Islamic Development Bank Group in Jeddah. And together with the team, they asked me to work in an area which had not really been addressed even globally, which is, it's called a financial guarantee. And according to Sharia, I'm not a scholar, but I'm working from my research, right? According to the scholarly approach for many decades, in fact, hundreds of years, the guarantor of a financial transaction is not able to benefit commercially. So if you pause and think about it, from the conventional finance point of view that uses financial guarantees up and down and sideways, every development bank I'm familiar with across the globe has a financial guarantee program that extends their balance sheet without using more capital. It says, I will guarantee, let's say, funding to SMEs should anything go awry according to the terms and conditions of our master agreement, right? And this is positive, and this was why the IDB group asked me to get involved, is to see how this financial guarantee product could be brought into the real world for the first time in a Sharia compliant way. And alhamdulillah, after many months and some hard work and very extensive and I would say beneficial discussion with the Sharia scholars at the IDB and elsewhere, we did succeed using my takaful background and some other structural ideas to create what the IDB board actually in January of 2022 approved as the first Sharia compliant financial guarantee structure. Okay? And the purpose of that, again, is, I think, to level the playing field so that the IDB, or in fact any Islamic financial group that wants to avail themselves of this idea of a financial guarantee, it can be used as a wrapper to a financial transaction, particularly the larger ones we talked about in the infrastructure, where the capital might be risk averse, both on a performance basis, meaning what is the actual risk of a commercial outcome that's been forecast for that transaction, but also there are other risks, sadly, in today's world, and digital money is not immune to embezzlement, to mismanagement, to mispricing, okay, to outright theft of data. So the financial guarantee, just in conclusion, is meant to assuage, to address and reduce the fears of the investors in order to bring them in so more projects can be done and economic development can accelerate.
And whose responsibility of that, like bringing the financial guarantees? Is it like the investors, the project owners, the government? From where it will start?
Good question. So it could start from a number of points, actually. It's unlikely to be the investors. It's more likely to be a combination of a partnership, in my opinion, a public-private partnership. Okay? Using perhaps the balance sheet of a governmental, like the PIF in Saudi Arabia, and like the sovereign wealth funds here. And it wouldn't take that much, in my opinion, of a capital to prove the concept, which is what needs to happen next, is implementation, a pilot project, maybe 35 million, maybe $50 million, something like that. And keep in mind that that capital doesn't necessarily, again, have to be cash. Okay? It can be a combination of private investors that like this idea, that want to bring this about and add to the tools available in Islamic finance and banking, at the same time to accelerate the area that a lot of people are still scratching their heads to figure out how they could release more capital to SMEs from existing institutions. Now, let's face it, Abdullah. In the current geopolitical circumstances we find ourselves in today, and the challenges of inflation and other challenges, the adoption of digital money, all the things we're talking about, is that SMEs are still perceived by the lending organizations, including the Islamic banks, but more particularly the conventional banks, to be high risk, isn't it? And how do we know that? Because, first of all, 80%, that's my research, of the applications by SMEs for capital from the banking sector are rejected.
Or even sometimes they are not interested to go into that direction of getting finance from banks. This is what I see. People are
but that's why. But that's why. Now, for the SMEs who are agile and creative, let's say, they can go to family and friends, they can go to VCs, they can go to some equity funds, etc., and some are. But when you've got 80%, and I'm told that the gap in SME financing in the Gulf generally is about $276 billion. So there's a huge funding gap. And what I was about to say is that the economic uncertainties, and not just here, it's deeply in the US, it's also in Europe, etc. These uncertainties are driving up the cost of capital. Sometimes to 22%, sometimes higher, if an SME is able to qualify. So how do we help bring that down in this era of what I'll call a capital credit squeeze? We do that by helping through what we've been discussing, which is risk protection mechanisms, and also by encouraging new, perhaps digital money type tools where there can be risk sharing, as we discussed with tokenization. It creates a much broader base and spreads the risk of raising that capital over thousands perhaps of investors.
Great. And let's take an example of like the takaful insurance, Islamic insurance sector. What kind of digital money can be created, or what can be the implementation on such sector?
Well, that's a great question, and it probably takes another podcast to go to do it justice, let's call it. But to exchange a few ideas for this purpose, what I would say is that in the takaful sector, which is, let's face it, it's struggling almost everywhere globally. And why? Because many of the companies are very modestly capitalized.
What does that mean?
So that means that their capital might be 100 million or 200 million, but their competitors, who are conventional insurance companies, would have maybe 10 times, 20 times the capital. which means that their risk appetite, obviously, is going to exceed that of the takaful company. It also means that they have an advantage of marginal pricing to the risk itself, because they have more capital to absorb any potential losses. I'm not saying they're doing that, but I'm saying that they have that added edge. And the third factor is perhaps we can bring that back to the government that wants to give, both here and elsewhere in the Gulf and the Middle East, including Egypt, for example, the government wants to give consumers choice. However, there are implications when you allow 11, 12, 15 takaful companies alongside 15, 18, 20 conventional companies. So Lebanon, they have 64 insurance companies. In UAE, I don't have the latest data, but I'm sure it's at least 28 insurance companies. So what happens when you have, let's say, 11 takaful companies? Now, some are only in medical, so we have to be a little bit cautious. But if we talk in the area of infrastructure, for example, or commercial properties, maybe you have 5 or 6 or 7 takaful companies who are competing for the same volume of business. So what happens? It means it's a price war. And actually, that's not good for the takaful companies to continue to have a spiral downward on the price of the risk, perhaps even to put them below the statistical analysis of having a positive surplus as a result of underwriting that risk. But also, ultimately, in my opinion, it's also not good for the consumers. Why? Because if our takaful companies are running at losses, that's not sustainable. And that means that ultimately the consumers will have less choice. So some things need to be rebalanced. Now, you asked the question of where the takaful companies, in particular being Islamic institutions, where they can use digital money. Well, one way is obviously in paying claims, particularly B2B, because as we said, that is less friction, less fees. It can go faster, so that the time of notification to settlement of the claim could speed up, and ultimately that might be a competitive advantage later on vis-a-vis the conventional companies, for example. Also, the digital money could be connected to reinsurance. And reinsurance obviously is a very important part of the value chain in the takaful and in the insurance industry generally. Why? Because the primary risk insurer is never going to keep 100%. This is not prudent and unwise. Taking the financial risk all onto its balance sheet. So it shares it out the back, so to say, to a much larger, better capitalized partner, which is called reinsurer or re-takaful. And fortunately, when I entered the industry initially in 1996 in the U.S., there were very few re-takaful. In fact, I think there was probably less than 3, and 2 of those were in Malaysia, and 1 was in Saudi Arabia. But fortunately today, I think there's at least 12. So the capacity of those larger, better capitalized partners to share the risk is much more evident today. And its potential for digital money transfers back and forth, I think, again, to reduce the fees and hence make ultimately the takaful industry and perhaps the takaful partners can be more profitable.
And do you see that, like, they are missing technology, or what's the missing part of this to happen?
Very interesting question and perceptive. Going into the pulse here. Well, again, my observation I'm no longer in the industry actively, but as an observer, let's say, Brother Abdullah. And for the wider benefit of your audience, what I would say, frankly, is a lack of vision.
Okay.
And I just wanted to maybe conclude with an observation built upon that, which is, if we take a step back and look at the Islamic finance, banking, and takaful sector generally.
Yes.
Okay? I don't believe it's necessarily a lack of technology, although it partly is a slow movement into innovation, and particularly product and service innovation. What I perceive is, and maybe because of the fierce competition and the pricing situation in many markets, including Malaysia, right, where they have multiple takaful companies as well. In Indonesia, they have 18, although it's a giant population, but that's still 18 choices that the consumer has, presumably, is that you have a circumstance where we need to start at the top, or with fresh blood coming in, with fresh ideas. And by that, I say conscious leadership when I talk about vision. Is where do you want, as the leader of your SME, your leader of your takaful company, leader of the bank or the asset management company, where do you want to take your enterprise in 3 to 5 years along the important rails offered through Sharia principles? This, to me, is one of the most important questions. Then you look, what are the tools and technology available that you can leverage? If we look only to the technology, then we might get, in my opinion, I used the word foggy earlier because there's so much change happening weekly in this area. So we might get confused, we might get lost, we might in some cases as leaders become, Abdullah, paralyzed, unable to see clearly what is the next step that we should be taking to move our organization forward, again, on our topic, to seize the opportunities of digital money.
And I think part of this leadership is through the leaders of the community, of the ecosystem, and the thinkers and people who also can be partners to the actual leaders.
Absolutely correct. And that's why I was so happy to meet you and the other leaders from the business community generally at Mawarid Forum, the FinTech Forum of last week, is because there was an emphasis from their leadership position on the ecosystem. So that's spot on.
I want to take you back to the future of tokenization. You said this is one of your interesting, like you think that this is going to have a huge future. So what do you see possible from tokenization?
Well, first, let me underscore that I've given you the right impression. That actually I'm really excited about the possibilities for Islamic finance, banking, and even takaful to move into the field of tokenization. Takaful would come with the risk-sharing dimension, right?
Yes.
And to lower the risk for investors, either retail investors or institutional investors, to get involved. So the tokenization, I feel, is actually a golden opportunity. What I said earlier to you was a second chance for Islamic finance and banking to make clear a segment of the global financial landscape which would be consistent with our beloved Sharia principles, the fairness, the full disclosure, the social justice, the caring about the planet, all of these things. Faith-based saving and investing, making sure, of course, even fundamentally, that our income is halal and our expenditure is, alhamdulillah, also halal, right?
Yeah.
So why is that? It's because the tokenization that are asset-backed builds the real world economy, which is the area, in my opinion, which is being neglected, and for some decades. How do we know? Because if we look on the liability side of the balance sheet of most businesses, increasingly of governments, my government is headed to 120% debt to GDP. That's not sustainable.
No.
In Venezuela and Zimbabwe and some other places, it's also not sustainable to be drowning in debt. Globally, we have at least 700 trillion today in debts, corporate, personal, governmental debts. And the GDP today, all the goods and services produced in a 12-month period of everyone on the planet is 180 trillion. So we're already underwater. It's a 4 or 5x of debt. Is that sustainable? Is it going to break? These are the questions that I think every citizen, every business owner should be asking herself, himself, and why? Because we need to understand, to bring this home, that what we do every day, the financial decisions that we're taking with our money, right? We are contributing to either the liability side of the balance sheet or the asset side of the balance sheet. And I'm hopeful the tokenization being anchored in real world assets will be more encouraging for people.
To be on the asset side of the balance sheet.
To be on the asset in the real world economy. And
that's very deep.
If we, thank you. If we read into the books on Islamic economy, where I'm not an expert, but it's obvious that one of the foils, one of the areas that shows the difference clearly between the Islamic economy and the conventional debt-based economy is the Islamic economy has hand-to-hand requirements in many financial transactions, has the requirement that it's halal and the activity being supported is halal. So what do we see on the conventional side? We see the securitization of debt, credit cards. Those are all promises. That's stuff in the air, right? And we have seen, unfortunately, serious economic collapses as a consequence of some of those debt deals going bad. I've been reading that even in the U.S. right now, with the credit squeeze going on, 5 banks have already gone bankrupt. Back in 2007, 2008, I recall something like 1,500 banks in the U.S. went under. Back in the great recession that we had back then. We hope that won't be repeated, but I'm stressing that has real world consequences to the employees, to the depositors, for the communities in which those banks have jobs, and most of those are small banks. So they get swallowed up by the larger banks, which, limits, among other things, it limits the choice of the community, whether it be in Sharjah, whether it's in Cleveland, Ohio. They want to work with credit unions. They want to work with those institutions which know the community, which the big boys in New York or Chicago, they're less familiar, let's face it. And as digital money becomes more of the rails upon which our large commercial banks operate, they will go further away, in my opinion. Why? Because their drivers are profitability, profit maximization, which is looking for ways and means to extract for their shareholders, the most amount of benefit possible.
And thank you for opening up these opportunities and also the ideas of how to look at digital money. Thank you.
Yeah, you're welcome, Abdullah. May I close with one thought? We have entered, as of maybe 2 years ago, astrologically, what they call the age of Aquarius.
Okay.
Now, when you look at the stars and the skies, which are heritage, and the Arabs of thousands of years ago were much more familiar than we are today of the stars, but the age of Aquarius turns out to be the age of knowledge. So actually, humanity now has moved from the age of information and personal computing, right, large servers, to the age of knowledge. We don't know how long it's going to last, but I participate in podcasts like this and around the topic of invisible money. And I thank you again for this invitation, precisely because part of my mission is to help our younger generation move from the age of knowledge to the age of wisdom.
Wow.
And collectively, we do have the power to do that.
Yes.
To join hands, to combine our voice so that we can realize the second chance of the infinite possibilities of digital money that can be guided by the faith-based values that we all hold dear. So thank you.
Thank you. That's transformational to move from knowledge to wisdom. Thank you, دكتور. مشاهدينا ومستمعينا، صراحة هذه الحلقة شجعتني أني أعيد التفكير في أني كيف أتعامل مع العملات الرقمية وأبدأ أستثمر فيها أو أشتري منها، وأيضا أني أشوف شو الفرص في مجال التوكنايزيشن، وأدعو كل رواد الأعمال أن يبحثون عن ما هي الفرص المتاحة من هذا المال الجديد، خلينا نسميه المال الرقمي. وأيضا أدعوكم إلى اللي حاب يستزيد في هذا الموضوع، راح نخبركم عن الكتب الصادرة للدكتور عمر فيشر في وصف الحلقة للي حاب يقتنيها ويستفيد أكثر. في النهاية والختام أشكركم جزيل الشكر، وأدعوكم لمتابعة حلقاتنا، متابعة قناة اليوتيوب، ومتابعتنا على مواقع التواصل الاجتماعي. شاركوا الحلقة مع اللي تحبون واللي تبغوا لهم الفائدة، ونراكم على خير.